Why'd you have to go? Why couldn't you stay? I won't know how it was. What if we hadn't spoke? Supposing now I won't know how you cope. And I'm thinking of the times we had. Oh, and I'm drinking all the wine you left. My floor plan in the snow. My doormat in the rain. Oh boy, I think we're lost. It's fine, you want to know that I broke down when I found out you gone.
All right, it is. This is Red Ben, and let me get rid of the echo. It is Wednesday, June 28th, 2023. You can get a hold of me on Twitter at RedBenTrader, and then if you want to learn more about the algo that I'm using to alert me to conditions for trade execution, you can talk to my coach Simon. He runs a trading room. There's a cost to be part of the trading room, but it includes access to the algo on your desktop, and it's a good deal. Just give him an email. It's trade the letter N wordperform at gmail.com. I believe he'll still give you like a week free in the room, but he only accepts maybe 2 new students a month. So it depending. I don't know if July may already be, those seats may already be taken, but like you can always ask, and eventually he'll take more. He wants to do things slowly, which I appreciate as a member of the room, because it means there's not like this constant influx of brand new people that we have to like explain things over and over again. It's just there's always more experienced people than new people, which helps. So yeah, anyway, that's the contact info. So let me pull up the candle chart first, and we'll just do a relatively quick review of what's happened so far. We're in the middle of fair value here. Let me get rid of the indicators. We don't really need all that at the moment. So this is the 2-hour chart of NQ, which is primarily what I've been trading lately. I prefer NQ to ES. It gives you more rotation. So for me, that means more trade opportunities. I'm primarily a scalper. I look for 10 to 12 points, and then if the opportunity arises to hold runners, I will. But I can actually do really well in a day like this that gets kind of choppy, or even this one. But yeah, that's not always the case with ES. Sometimes with ES, you kind of have to get the location correct, in addition to like be able to hold it long enough to actually make it worth your while. And in NQ, you, as long as you've got the location correct, you can actually make decent money just by taking rotations. And even if you miss the bigger moves, you got paid. So I mean, technically ES works like that too, but like it's, I guess it's personal preference, because if you're good on the dom and you can be like particular about where your entry is by the tick, you'll do fine on ES. But in NQ, you kind of have a little more like wiggle room for, because it's like I can take maybe like a 20-point stop and easily recover that in the day, or in an hour. With ES, you have to be, it's slower, but you have to be right to like maybe 5 ticks. So you just, it just depends on your skill set. The one negative of NQ is that things do move fast, but with the algo reading the footprint and the DOM, that's not really an issue. I don't need to like interpret the DOM or the footprint in real time. I can just wait for the setup to be alerted to me. So yeah, it just it puts, in my opinion, the edge is just a little bit better in NQ. But this also works in ES and it works in CL, and we've used it in bonds. Some people trade gold. I'm not really a fan of gold personally, but not the metal. But I mean, I'm not a fan of trading it because I don't follow like FX and all that stuff. I just feel like I don't have an edge there. At least with NQ, like yeah, it's popular enough that you're usually going to have the liquidity to like get in and out of a trade without too much slippage. That's not always the case with GC, especially if you didn't realize that there's some, I don't know, like ECB speaker or something, and something they say could like drastically affect FX. Well, it's probably going to affect gold somewhat then, and it might not affect NQ or ES, but it could, yeah, bonds. I mean, metals are just a little different. But what was I saying? Okay, so tangent. Sorry, ADD. It's hard to stay focused. So I know I've got a lot of lines here. I don't really want to delete them, but we don't use them all at once. I will hide them for the time being. So yesterday we had a trend day, but if you look, we were unable to get beyond the high of the previous day. And we're within the range. We were in the regular trading hours within the range of the previous day's range. So it looks like a trend day, and it is from like a auction standpoint. But it's actually just an inside day. So yes, it was bullish. Yes, it was a trend day. Sellers got trapped at the lows and got squeezed, but they didn't collect the liquidity that they were targeting by the end of the day. And so overnight they retreated a bit. And if you were watching yesterday's stream, I talked about how you can draw the volume profile, and wherever of like a consolidation range, not necessarily of the day. I mean, that's also useful, but if you see that we're trading over the same range over and over again like this, you can just draw. You can see this goes from where we started to retreat because it was going down, and then we turn around here and they tried to fight back. So I start the draw there and then drag it to the currents here. I'll just redo it. I'll show you how you do this. So on TradingView, it normally looks like a long position marker here on the toolbar to the left, and all the way at the bottom there's fixed range volume profile. I don't know. Yeah, I don't really need it as a favorite per se, but because it's right here. So then since if you look back, we were coming down before the consolidation. So I want to start the consolidation draw, the volume profile draw at the point where we started to consolidate. I don't want to include the big momentum selling. So you could technically start it. It would be like here, but in my opinion, because we had what was a divergent low there with less volume as we went lower than this low, in my opinion, that's part of the consolidation. It just went lower. It's the result. The result of the divergent low is an expanding consolidation or expanding negotiation, which is what I usually call it. But Jim Dalton would refer to it as a consolidation or a like a normal distribution is what you would expect eventually. So start there, take it to the current price, and then in training view you're going to get these dashed lines, which is the volume area high and volume area low. And so the prices in between those two lines, that's where 70% of the volume was done over that period of time, which is like 1, 2, 3, 4, 5.5 days. So even though we've been trading in that range from this high to this low, the vast majority of the contracts were traded in this zone here. So what that does is it means it creates, everyone now knows that because this is the value area of those days where we've been trading in that same range, everyone agrees basically that that is the fair value for the instrument. And like I said, this does work on other instruments, not just at NQ, and it also works on any time frame. So find a consolidation, draw the volume profile over the consolidation, find the value area. That is your fair value price. Everything in between value area low of that draw and value area high of that draw, you can basically, the auction is going to treat it as one price. And the result of that means that sellers are trying to participate above it, and we should too as sellers, and buyers are targeting entries below it. But any movement inside this value area is going to be more random, and the auction's going to easily sweep through that value area because, like I said, there's really very little difference in this price to this price because so many contracts have already been traded in there. They're not going to defend those prices with a lot of money. Because if you think about it, like, who wants to put their money on the line when you don't have good odds that you know which direction the market's going? Nobody. Whereas if it gets up here, well, if this is fair value, people will start to sell it because they think it's kind of expensive. But if it gets underneath here, the natural reaction is going to be to buy more because it's on sale. So generally the best trade opportunities are going to set up outside the value area of that consolidation, and you're going to be, you have to be very careful not to take trades in the opposite direction. You don't want to be a seller down here when it's consolidating, and you don't want to be a buyer up here, which is hard for some people if you learned like how to trade with like penny stocks and you normally trade like running instruments that are like that have a lot of momentum. It's kind of the opposite of that. We are taking an advantage of all the traders that are doing that because we expect the market to sweep through this zone over and over and over again. Now eventually it will break out, but if you think about the odds, because you always want to play with the odds, not against the odds, like be the casino, right? Not the gambler. So the way to look at it from a casino point of view is there's a high likelihood that if price falls back into this zone, it's probably going to head to the opposite end, and it's rarely going to break out in the direction that it just came out of. So for instance, if it came down here and then popped up, so like someone might buy even this, like they might buy this as a breakout, that would be a better place to be selling, and then take it down here. And then this is a perfect example where it actually breaks out of there beyond that wick. And we actually want to be a buyer, not a seller here, targeting back up here. So you can trade the range if you want, but realize that it's not always going to be a straight line. They can wiggle around in there pretty randomly. So that can be pretty frustrating. The better trade, in my opinion, is to wait for one of the sides to get trapped. Like here, sellers got trapped yesterday, which if you want to learn more about how I knew that, you can look at the stream that I did yesterday. I spent like an hour talking about it. All sorts of evidence that they got trapped at the lows, and then when they tried to like save the momentum and failed. And the result of that is not only are you on the correct side of the value area if you believe it's still consolidating, which I did, but you've also now got all those sellers trapped below you, and they also know that the whole value area is likely to get traded through, so they become new fuel to push to our target. And then the same thing can happen on the opposite end. Like up here, you might not have known you were consolidating yet, but it's if in retrospect it's going to look kind of obvious. At the time it wouldn't have been that obvious, but here you had breakout buyers that didn't get any volume, just like these sellers didn't get any volume, and so the result was a retrace. They fell back into the value area. You can see right here, that's what I call a last defense, where they try to break back out but fail. So that's your sell, and your target's here. Or use the voodoo range level, they'll work similarly. So when it gets this choppy, where you're going over the same area over and over and over and over again, the very worst place to enter a trade is going to be wherever most of the volume was done. And that's this red line right here, the VPOC of this consolidation range that we drew. So right there is like the last place we should be looking for entries. That's actually should be a primary target. And then we can hold runners in case it crosses the value area low or high. Now we can look and see where it's positioned inside of the value area, and that's going to give us some hints on which side is in like more likely to get that breakout. Because if, for instance, we have it like this where it's on the bottom half, if we make a pullback and we can't touch that VPOC and then get out of the value area, it's almost always done consolidating. Because when it is consolidating, I can't talk, I hear my echo slightly and it interferes with me, my pronunciation and speed. It's weird because I've got headphones on and there's like a 3 millisecond delay. It's definitely strange. Because there is a little bit of a delay on YouTube, but I've got it as low latency as I can. What was I saying? I got totally distracted by that. Shoot, I lost it. The VPOC, right. So normally you can see that we almost always touch VPOC. We don't always touch the value area high and low on these sweeps back and forth, but if it's consolidating, almost every rotation is going to go over this pink VPOC. See that over and over and over. So it's definitely the worst place to enter when you're consolidating, but it is a great target because you're going to hit it over and over again. Even here, you can see we came out, we trapped shorts, we came back in it. It didn't reach the value area high. And where did it go? Right to VPOC. And that's what I mentioned yesterday when we saw this pullback. I said, don't go buy puts, because what's probably happening is we're going to go back to the VPOC, and since we still have shorts trapped, they're going to get to their target, which is the value area high. And then there's liquidity sitting here, and at the time there was liquidity sitting here. So the likelihood that that gets swept up is extremely high when you have consolidation that's expanding like this. So it's this kind of action is not necessarily easy to trade. You need real clear and consistent entry criteria, and you need a plan like this with like locations very like just like definitive. But if you can have that, it's actually really lucrative. But it's not for beginners, in my opinion. It is challenging because it's really easy to like see this and be like, oh look, big volume, we're breaking out, I'm gonna buy the breakout, and then you and then the same exact thing on the opposite side, like here you might see building volume pre-market and you're like, oh look, we're breaking down, and then boom, trapped. uh but that's why you need to not be you need to be on the side of probabilities. If you know you're consolidating on a higher time frame than you're trading. So for instance, if I'm trading like the 3-minute chart or something on a, how long are you in a trade, how many candles basically can you tolerate of risk, and like if you can't tolerate an average 15-minute candle, which is, for me, that's the case with futures. Like I'm not technically trading the 15-minute chart. I may find a pattern on the 15-minute chart, but my like risk management needs to be on something much smaller. So when you're scalping like that, taking such small ranges, you need to be aware of all of these charts above you. Whoops, what happened here? That's not correct. Okay. Hold on. What are you talking about? Invalids and what happened to my trading view? Did I lose the stream, perhaps? Am I not online? That's very, very weird. What did I do wrong? All, NQ. I just changed the time period. It's like, it's there, but it's not there. What in the world? Am I signed in? Yeah. Wow, guys, sorry. Well, we might be done with TradingView. I clearly have internet. This might just be a TradingView problem. Let me just try to, it's not going to save anything, but let's see if I can, oh, okay. Here, I just needed to reload. That was weird. Can't say that's ever happened before. We lost our progress, but that's okay. And the things came back. So, but one way or another, just realize that you need to be aware of higher time frames than you're trading, and you want to like treat that like your regime, your environment, and that's going to help you choose your locations and decide whether or not you are trading looking for breakouts, or trading a range. That it really is something that you must you have to be aware of, before you even make a plan. You need to first say like, well, what's happening on the higher time frame that I'm trading, and since oh look, I am delayed, so they kicked me out. Let me see if I can fix this, guys. Hold on. They do not. Oh, I see what happened. They kicked out my, okay, let me fix this quick. So we have to disconnect this, and then I can plug in here, and then I'm gonna have to, hold on. Technical difficulties. Coming right back in a minute. Hold on. I will fix this. If you lose, I should probably make sure that I didn't lose the stream, but if you lose internet, they will occasionally kick you out of your trading panel or whatever it's called. The trading, like to get real-time futures data, you have to be signed into your broker on TradingView, and I can't be, I can sign in on both, but I have to do it one at a time, basically. So let me just get every chart in here updated, and then we're good. Sorry, there's a few. Okay, there we go. Yes. GC, VIX, and bonds. Okay. And then once those all load, I can reconnect to the algo. So just wait for those to load. This should be no longer delayed, and then connect, and that should work. Okay, so yeah, once you know that you're consolidating in a higher time frame than you want to trade, now we know that anything we enter in here, the only reason you would do that to get in the in fair value is if you were targeting either the VPOC, which usually makes sense, or you are going with the direction of the smaller time frame like momentum. But to do that, you must have trap traders behind you. So and the reason for that is because the only way that you're going to reach your target, the value area high here or higher, is if you, well, I shouldn't say the only way, but the only way you really have a high probability that it's going to happen is if you have trapped sellers at a discount below fair value. If you haven't, if we didn't get this big sell, then most likely all you're going to get is this kind of action inside the value area, and inside days would be likely. And so if you just try to hold until this consolidation value area high, there's a lot of times you're not going to reach it. But you can see when you get outside of it and you trap them, well, now they become the fuel to push to the opposite direction, and then you go back into the choppiness. And if they can't reach the high one, they go further, and then if they get trapped, well, now you're coming back to this one. And so I guess what I'm getting at is, or what you might have already caught on to, is that because we've already gotten these guys squeezed out through fair value, because remember, when they sold here, they thought they were getting in on the break of consolidation, but they were wrong. They got trapped and we got back into fair value. So they know by the time we get back in here, they know pretty much that price is headed back up here. They should know. So they, and that becomes like a self-fulfilling prophecy, because they know and they don't want to lose money, they end up being the buyers that make that happen, which is interesting. That's just the way the market works. But once they've done that, the expectation should be we're going to come back to the VPOC of consolidation, the pink line or reddish pink line, and then we can trap more people on a smaller time frame, which will push us to trap more people on the higher time frame, and then that gets us to our target. And then you can literally do that over and over and over again in that same range for as long as they want, like until we find interest on the opposite side of consolidation. So because of that, the last thing we want to do, like I said, and I'll say it again, is enter a trade near the VPOC, with one exception. And that exception is when price leaves the fair value area, spends time up here. In my opinion, you should get at least 2 or 3 30-minute closes up here. This does not count. And then when it comes back towards the VPOC of the consolidation, if they then can't reach the VPOC and break out again, there's a high likelihood at that point that breakout, assuming they break over this high, can be followed because momentum is probably increasing. Otherwise, they would have tagged the VPOC first. So the important thing to remember is that the VPOC is not a place to enter unless you have evidence that you're no longer consolidating. And that evidence is you've spent time, significant amount of time, and developed more volume outside of fair value before you then return to the VPOC, and you then need to bounce off of it or not reach it and lift. Like if they come down here and like dump into the VPOC, the voodoo range level 69, and then bounce and get back up here and close the day up here, totally possible that we're done with this range. But that would be the exception, not the expectation. The expectation is we hit the VPOC, and if we, which we probably did, if we trapped some buyers up here, then we're coming back to the low of day and most likely targeting the value area low of this consolidation, and we'll just keep going back and forth. So it's a good idea to have, the only way you can trade this effectively is if you have a way to know, or have, I guess I shouldn't say no, but have strong evidence that buyers got trapped buying outside above fair value, or that sellers got trapped selling below fair value. Those are the trades that will pay you on days like this. Whereas the little stuff that triggers inside here is going to be like really spotty as far as like whether or not it's going to stop you before paying you, especially if you use a tight stop like I do, because I, like I said on NQ, I really can't take more than maybe 20 points. And so I need to, first of all, because I mean, it's $20 per contract with the minis. So, I mean, $400, like, I don't want to be trading these Apex accounts. Like, even like mine is, they're 150K accounts, but my max loss, assuming I haven't overcome the threshold for, in the PA account, eventually, if you make enough, you can pause the trailing drawdown. But initially, that trailing drawdown is, I think, $3,500. So, like, if you lose maybe three 20-point stops, if you take three 20-point stops in a row, like, that's, if you were trading two contracts, you're already down like $1,200. And so at that point, you'd have to decide, like, am I doing something wrong? Because now if you do that again, you're going to blow up the account. So you can have a bad day, but you can't tilt with those accounts. You need to know what your limits are and know what's normal. And for me, taking two stops in a row, totally normal. Taking three stops in a row, something's not always wrong. Sometimes it is just, the market's just choppy, but usually the problem is I'm trying to use the wrong strategy based on the regime of the higher time frame. So like if I kept on trying to buy breakouts here, you could easily take three stops, and the algo is not going to know whether or not you should be looking for breakouts or if you should be looking for mean reversion. It's going to show you both. It's going to signal when both of them are available, but it's up to us to filter out and decide which ones to follow and which ones to ignore, which takes some practice, but it's you get better at it. Thankfully, you don't need to be perfect. Obviously, nobody's perfect. You're still going to make mistakes, but it certainly takes a lot of the decision making out, because I don't have to constantly ask myself, oh, should I have gotten long there? Maybe now I should chase. Maybe it's too late. Like, those things are already built into the system, but it's not sophisticated enough to tell if this is a time to execute trade A versus trade B. It'll tell you that trade A is available, but it's up to you to decide if this is a good like location and condition for that trade. So hopefully that makes sense. So note, we bounced off the voodoo range level and we could not reach the VPOC. So if that low holds, it's got another 20 minutes on actually we've got 50 minutes before the end of the day. So, but if we have, if we can see on the algo, so the VPOC is like 53. So let's take a peek and see what I don't know if we're going to get along, but we might. So 53 is down here. So if we fail to get down there and they get out of here, we could see a little squeeze. But we didn't we didn't hold above the value area. So it would be kind of unusual, but not unheard of. So ring followed by triangle up is really good if it's at support, and it is. So that would have been a decent entry if you felt that this level was a support. And the green in the background there means that a previous day, I think it was yesterday, it was single prints, and it's right in the back of the single prints, which is exactly where you want it. So just a couple, 2 minutes late to take that. But and the rules are I would have to wait for price to return to my entry or anywhere in there. So if we come back here and then bounce, I can take it. But if it hits my first target 10 points away, I can't just chase it. And it looks like I just missed it. So that's too bad. But let's see if we can find something in the smaller time frame because it's more likely to wiggle on here. So these are delta bars, volume delta. And so when you have a big delta going in the direction of wherever you think momentum is going, which, like I said, we just identified that it might be positive. If you can get above that on a bar that's not pink, like this, and then you get a blue dot, preferably on a pullback, but that technically would work, you can scalp long with the momentum. I don't like doing it when the bar is gold like that, because that suggests that we are on this tiny little time frame, we are buying at a premium. So, and like people are buying at a premium and they know it, but they are buying anyway. So that's that. It's not that it's always wrong, but you better be sure that you have the direction right. Otherwise, you're going to get smashed. Because if it's consolidating and you buy at a premium, just like we talked about just now, you're buying exactly the spot where you should be selling. So, but like I said, if there's momentum in the market and based on the deltas, it looks like there might be, then it can be okay. But you generally would prefer to get a little bit of a pullback into that location and see them hold it. Otherwise, if you just buy here, it's not, if you look to the left, it's not a breakout, right? There's nothing like, there's a little bit of a resistance here, but not much. And so you don't really have any evidence that they're going to hold that level on a pullback until they do it. And sometimes that means you miss the trade. And like I said, technically it triggered back here, but I just wasn't looking at the chart at the time. And honestly, I didn't realize we were at this previous support. I just didn't see it in time. But we also trapped this guy. That's pretty sweet. So he's there's delta divergence on another time frame, basically, where there's more trades being done on the ask than the bid, and it's at the very low of this rotation, and then we got over that. And so when price gets over those big deltas, you're like, whoever fought here to hold price down is now trapped. That's the easy way to think about it. Is the reason there's so much delta there is because either buyers gave up at the moment, and of course getting above a point where buyers gave up is also a good thing because it suggests that you've got new momentum in a place that in the past people were just giving up on. So that's certainly one way to get a squeeze, but another is to get somebody aggressively fighting at the low and then getting above them, which is basically what this is showing. A star at the low is a similar, I don't have it here, but if we like a yellow star like this, if it's at the low like this, see how this star is near the low, and then we get above them. And so as long as this holds on the pullback, you can get an extension like that. It's just relevant to the time frame you're looking at. It doesn't mean that that's the low of the day or anything like that. It's not magic. It's just reading order flow and saying on this time frame, and these are all Renko bars, so it's technically not time frame, but it's like, if considering the rotations of this size. So here it's 15 tick rotations, here it is 24, and here it is 40 tick. So if you break up the move into 40 tick blocks, that's what you get. And so Renko's awesome. If you don't know it, learn it. But it helps a lot with identifying these rotations. Man, that was a good trade. That's too bad. Well, it's good. That's a good sign for buyers that they did not come back to that VPOC. Like I said, I didn't have the confidence to think that this was enough development up here to start, or I guess continue, like an uptrend. But not touching VPOC is pretty strong. So if that low holds, I would be thinking calls overnight. But yeah, that would have been a good entry, and that's the dot before it is actually really good. But you do need the triangle after the ring. The ring by itself is not good enough. But you'll see up here, it triggered in the opposite direction. It's the same exact thing, just the opposite. So ring, triangle down. And to the left, did we have someone trapped? Was this X trapped? We had the gold bar. So these guys were buying at a premium. And not surprisingly, they got a pullback. They tried to shift volume. They put in, I'm going to talk about that setup. It's awesome. They got under him. Where's the ring triangle up? Yep, they trapped the X. They come back up. Look at all that. Huge delta. They hold, and it's over. Yeah, see, this is beautiful. That's just perfect. See how this, so I don't want to get too distracted in case we get an opportunity, but there's a really cool trade using these deltas where, like I said, I don't think this is going to dip. It shouldn't. But if it does, we could technically jump on board. I don't know if I want to get into, if I start talking about setups, then I'm gonna end up having to leave the area, the view, to go find it, and we're gonna miss another one because I should have taken this one if I would have been looking at it, which is too bad, but that's okay. So again, the goal is that people are buying at a premium, even at like knowing it's a premium. And so if we continue higher after gold, it suggests that there's momentum in the market. Usually you get a pullback and then it bounces, but they can get trapped very easily. So it's generally not a great place to enter unless you have evidence that you're breaking out. But the biggest delta is way back here. So this is the point where like the biggest difference between buyers and sellers, like aggression, was way back here with the dot. And those dots are volume shifts. So each time you see a blue dot, it's like, it depends on where it is. You don't always want to buy there. But if the location is correct for a, like if you have risk reward, let's say it that way, it's generally a pretty good place to enter. And you don't want to put your stop right under it because it's not that unusual to see them come back and test the level. But if they develop volume below it, it's usually, even if it comes back up, you want to exit your long. I can show you some examples of that too. So they are, again, trying to push out of here because we did not test this VPOC on a pullback. And that VPOC is based on the draw of this entire consolidation range. We got above it, above the fair value, came back in, looked like we were coming into it, tried to bounce, ran into another value area high from a different draw, retraced on another time frame, and could not take that low out and couldn't hit that VPOC that was acting as a rotational fulcrum before. So this is fair value. Everyone agrees that that's a fair value, yet we can't get to it. How would you feel if you shorted down here and the level that was agreed to, that everyone said was a good price, suddenly no one's willing to go down that far in price? If you're in that auction and you sold lower, you want to get the hell out of there, right? So that's what creates the squeeze. And like I said, the gold is not always a bad sign for buyers. It's just, for me, it usually means it's too late to chase. So, because while sometimes you'll get this, especially at like the end of the day like this, if it's rotating and not squeezing, you're going to get jammed hard. So, but when they put in gold and then they can't pull back, or they try and they lift again, you can sometimes get a another opportunity. So let's see if they can hold this dot. That would be ideal. We'll see. But they can just go, like, right, and we're not gonna chase it because I don't have an edge there for just saying like, oh, it's long. I want to be long. Like, there's no edge there. Like, my stop has to go where? Like, down here. Like, how am I going to get paid on a regular basis? Like 50, 60, 70% of the time there. I'm not going to, because a lot of times it's going to pull back, stop me out, and then run. And I'm going to have no way to know like which one of these is the right one, because I don't have any order flow that says what's going on. I just have squeeze. So now you can go to a smaller time frame and look for the setups there, but then you'd need risk reward on that time frame, and you'd need to be able to execute very fast. So it's not impossible, but if it's slow enough, it can be done. You just have to go to, like, rather than a 15 tick, you'd go to an 8 tick. And this is that here. I'll go to where the gold starts. So here's where the gold starts in the 15 tick. So at this point, if I'm like, I don't want to chase on the 15, but if I get a blue dot that's not gold, I can probably buy it. And there it is. So I don't want it, like I said, I want the pullback because this is normal. You don't necessarily want to take this one, but when they defend it like this, that's an entry on the 8 tick. Now the thing is all I know is that it's likely to create about 2 bars. And at that point, I want to be out of at least half of my contracts. And the entry here was 02, and that only got me to 05, 50. So is it worth it? Like, you better be quick. And now sometimes the runner will just go and you'll be fine. But the high win rate is based off basically 2 bars. So here's another one. Let's see if we get a pullback and a bounce. Yep. See how they defended it? So that would be 109. And you need to get one more than this before this low gets taken out right there. So that would get you another one. And then you'd hold your runner if you want. That's another defense. So enter here. And then you're out there. Right? So, I mean, if you're quick, you can do it. And Simon does it. It's not impossible. People in the room do it. But you better be quick on the dumb. Because you can get crazy slippage on such a small time frame. 15 tick is small enough for me. I prefer to like have a trade no more than every 10 points. I don't want to take a trade every 5 points on NQ. But technically, when you realize that you missed your entry like that, like I did, if I know on the higher time frame that it's probably okay to chase, but I just need better risk reward, I could technically go find it on the 8 tick. But yeah, there's a lot of noise on that small time frame. Let's just put it that way. It's easy to get very frustrated because now the good news is your stops would be tiny, but the time when you do everything right and then there's like a 4-point liquidity grab that like you weren't expecting and it scoops up your stop and then immediately goes to your target. Even though it might only be 5 points per contract, I can't tell you how often that kind of thing like throws me off. Like, I just get even slightly tilted. It's just not worth it for 5 points. The risk of seeing that happen is like, yeah, especially if I'm up on the day, which, I mean, I'm doing pretty good today. Let me show you. So here, I put it on here. So yeah, pretty good. Both the performance accounts did fine. This one was the one I traded later in the day that got a nice runner. And then this one was mostly overnight. And then like 15 minutes after the open. But the win rate was pretty good. So happy with that. And when you do that, like, why keep trading, right? Like, so I've got a Apex account that I just bought. They're literally like, you can get a 150K account for like $30 right now. So I was like, why not? If I qualify a third PA account, great. So, but I have to admit, I don't necessarily treat those evals with a lot of respect. I'll trade poorly in them often just because I kind of don't care. But it's a bad habit though. What I would recommend is just do exactly what you would do with a real live account, and take your time and chop it down. You know, like just build your account until you hit that goal. But when you already have a couple like performance accounts, it's really easy just to kind of like throw money at those things and not really care how they turn out. So I'm totally guilty of doing that. Where it's like, oh, this looks like this might work. Let's see how this. What would happen if I do this? And then, oh, yeah, that doesn't work. Okay, good to know. Next. And it's, I don't know, for a $30 risk, if I've got the potential to like get another funded account, like, yeah, it's worth it. I don't want to just like play games with it, but like if I think I have something, it's just a matter of learning how to execute the trade. Like it's a great place to practice. Like it's a laboratory for me, and I've learned some great trades doing that. So see this big delta here? They're trying to take this down, and then we want to look at that. So look, all the delta was down here for the buyers. So that's like their stability point. And then they were going higher at the end, but it didn't get this high. So if this was the high, see that? That was the high of this rotation. So a very cool reversal setup is if we get a up bar with a high that's above this, but the high is not above, the high in price is not above this high, and then we beat that guy, you can get a roll down. Now sometimes you don't see it. Like it's basically on a smaller time frame. But and then it can just kind of look like it reverses this whole thing. Like I said, that's the risk of these gold bars, is that they all know they're buying at a premium. So if they run out of gas, it's just going to come all the way back. But a really, really consistent setup that I used twice today, I'll show you if you'd like, is you get that divergent high where they can't put as much, they have building volume into the high, or into a high rotation, high of a rotation, but it's not as much volume as they put in earlier. And then the sellers fight for that. When they see that, they're like, look, they're pushing as hard as they can. They're actually building more delta, but it's nothing near what they really had before. Let's call their bluff. And so then if they pull back, and then you get a big buyer coming in, but they're not able to break the high, it basically says, like, you got to ask yourself, like, why do they need so much delta and volume, like, when they're not even at the highs? Like, well, probably because the sellers are actually fighting back here. And so you don't want to guess. You don't just want to short it because there's a lot of buyers. Like, that doesn't really make sense. But if you can get under those buyers now, it's very rare that they would get the like energy to try that twice in a row. It happens. It's not, I'm not saying it's 100%, but it's high. A high probability that if you can get under that last offense, that it is truly the last offense. The target then is to return to the bigger volume delta. So you would target down here, and hopefully from a lift, you'd get a pullback that then gets taken out. So if this guy has more delta than this, it'd be tough to do, but it could happen. It can be on this time frame too. So here our high was here. Was it divergent? It's just barely. So delta would have to be all the way up here on the 24 tick to trigger on the 24 tick. And the fact that that looks unlikely probably means that if we do get the setup, it's going to go to this delta and not the 24 tick big delta, which is way down here. So here, there might have been one right here. Here, this is one right here. So see how the biggest delta was at the low. They went higher, making lower delta. But towards the end, you can see how they tried to build it, but it just wasn't enough. So sellers attacked. Makes sense. Can't talk. Then they pull back. They try to save this move because they know that the next delta is way down here and they don't want to give that up. So they put in a big move, and that close is bigger than this close, yet the price is lower than this price. So in other words, they needed more delta, more difference in buyers and sellers just to take this back than they were able to put in up here. That, like, it can be fine if you keep building, but if you don't keep building and you take that guy out, it's immediately gonna be done. And then this area becomes resistance, which is where a lot of these rectangles on the chart come from. See that? I should have drawn it because that. Oh, and then ring triangle up. Jeez, I'm really distracted. So that would have been entry right there, and I totally missed it. That's what I get for doing the stream. I was so hyper focused on the 15 tick that I wasn't watching the 24 close enough, and I didn't see that. But that is a beautiful example of that last defense. And then that means that this move will probably be rather large, this pullback. Usually, that higher time frame rejection is usually pretty good. In fact, I could probably short this if they can get high enough and then roll over. We might get a short. The thing I don't like is it's going against the bigger picture, which is what I just spent half an hour saying not to do. Is like we're playing against the odds, but on this time frame, that level is holding, so we could do it. But bigger picture, we sort of expect the buyers to push out of here. So, and when you have those two things not lining up, the result is usually either the higher time frame wins or nothing really happens, and you just kind of get stuck and you have to wait for the next setup because, like, it's just not ready. They usually need to align. Let's go ahead and try it. We'll take the sell here on the pullback. So we'll take. Oh, I took 4. Oh well, it's a eval. We'll see. I probably should have waited till this closed. But again, with these evals, I kind of don't care. Let's just see if they can hold this level. Because I see initially I could have gotten in here at that triangle or anytime during that pullback. They technically hit my first target. So the rule is the trade is gone. But they came right back to it, probably because it's going to stop. But yeah, on the smaller time frame, we see weak delta here. And on the bigger time frame, we already had earlier seen that move at this location where they tried to save it and failed and then returned to it and rejected. So this is resistance. And if they can't put any delta here, they're not going to beat that resistance. But like I said, higher time frame is going the opposite direction. So that purple bar, basically the orange here and the gray, needs to hold for this to work. And we should see bigger sell volume delta coming in here. Like, buyers should be less willing to do business here than they were up here. Because this was resistance, and they put in a lot of delta up there and then gave it up. And like I said, if they put in too much delta here and then get beat, it's a great short. But if they start building delta and they don't beat them, they don't get underneath them, they can take this back. So I know it's a little confusing. It's like it's bearish sometimes because there's not enough buyers, and other times it's bearish because there were tons of buyers and they got nothing for it. They worked really hard and didn't get anything. So we'll see. All right. So the trade is working technically. Where'd it go? Oh, there it is. I hit my target. Sorry, I didn't realize it got covered up. So we got 2 off at 10 points. Actually, it did it as 12. Okay, and then we're going to take one. Hold on, let me just make sure I don't lose it again. We really need to see that break on this too. But the next target would be wherever there was a big sell delta. Definitely here. like 83. It might not matter. They might just rip it up now. But at least we got 2 off. The biggest sell delta on this was here still. So they see this is divergent for sellers. So this could be a problem. Yeah, we should probably go ahead and get out of here. Let's just give it a minute and see what they do. But if they start building, see how this delta is bigger than this belt delta? Bleh, can't talk. If they continue higher from there, it's probably down because this sell delta is decreasing with price because we made a lower low here. So if it was super bearish, we should see more delta coming in, not less. And then buyers responded with this. So if they push higher, it's over. But if sellers can get under this guy's trapped. But most likely, it's done. Seeing this divergence and the higher time frame being bullish, I just have low confidence. But and then we're right into those single prints again. There's like 3 sets of them, so I think we hit this. Oh yeah, so this is a separate one. So these are 2 stacked on top of each other. Wow. Yeah, yesterday was a big trend day, so lots of single prints. Who's bigger here? This was close of 82, 84. The first one was bigger. That's a good sign for us. They're putting more delta in on the second try, and then we're trying to fight them. We need to get under them though with volume. Otherwise, it's gonna get beat. What time is it? Okay, good. We got. Okay. I don't want to be in this when they do the market on close announcement at 10 to the hour. That is just a huge liquidity grab, and I would rather not gamble. So even with the accounts, the evaluations, I don't, unless I've got like 2/3 or 3/4 of my trade out, I don't want to just, why take any chances when I've got a system that actually works consistently? So the purple is telling me that buyers are giving up here, but it hasn't closed yet. So it's only if it closes purple. And if it closes pink, it means sellers are giving up like they were up here. And it basically just means that the market's moving primarily due to illiquidity. Yuck. So if this delta is really big, we're probably down. Technically, they'd have to go higher from there, but like 3 in a row like this, they're clearly not giving up. And you can see we were unable to close it purple. And now they're fighting back, so the purple goes away. It could technically come back, but we need to like sweep through a really, really big like zone with illiquidity now. Because there's just, the purple saying that there's more movement from illiquidity than from actual aggression. Oh, look at the delta. So we're going to get out at break even. Because look at this. So now if we get under this, it's bearish. But at this point, with the higher time frame being bullish, they didn't close it yet. So technically I could have waited till it closed. But I'm not going to fight this against the trend. So, especially with divergence here. All right, so they get a star on X and a dot. So this needs to hold for buyers. This needs to hold now. If it doesn't, we can get back into the short. They can technically trade slightly under it, but they can't put the yellow line under it, which is where most of the volume is in the bar. So we could technically buy this. I guess we should buy it. Now our stop needs to go just a little bit under this because they could technically sweep under it and then lift, but not too far under it. Couple points, max. But again, that delta is so big and there's aggression in that bar, which is what the star and the X is telling me, that like, yeah, they could get beat, but I'm way more willing to buy here, given the higher time frame picture. And what I needed to see was that they were actually going to defend here. So if this gets beat, it's a short. But for the time being, it appears that they're defending these single prints just like they did here. So they're just doing the same exact thing basically with a different type of aggression. And you can see this X going the opposite direction. If we can get over them on a bar that's not pink, so not just sellers giving up, but real buyers showing up, it can squeeze. So the pink bar is not going to be enough to squeeze it. And if this is another pink bar, we might want to take some profit. I might have missed it. I should have managed that better. That I could have gotten one. All right, I got 2 off. That's good. They're pink. I'm good with that. So they can squeeze, but usually you're going to need to see some more delta here. And just pink bars after this big delta is like they're not going to be able to handle any sellers if it's just pink. If they can put in a white bar, then a down bar is going to be fine. But they're not going to be able to fade any aggression. Yeah, see, this is probably not going to work. Oh. They need a white bar here, more or less. Oh, but look at delta. There we go. Delta got bigger. We are good. So we're going to hold. Stop stays down here. It's not always going to work, right? But we've already gotten half of the thing out. And just with these 2 trades, I'm up like 1,000, 1,100. So like, I could just exit if I want, but like, I might as well just see what happens. We've got 8 minutes till MOC, so I'm going to make sure I'm at least out of one more of that before that. My primary target is this dotted line here. That's where the volume was earlier when this delta was so... the big delta's here. Did I miss it? Usually those are aligned, and this is not. So we are trying to fight the big delta right now. What about on the bigger time frame? The big delta's at the high. Yeah, so that's our target's 24. So let's see if we can get filled at like 23. Let me just check the NQ chart and make sure there's nothing in my way. 21 has a purple pivot. So we will try to get 20. And we might not get it because we're running into the biggest delta here. See that? And they're defending it. So it's very possible that they actually hold that. But there's no way to know. It holds or it doesn't. But look at all this. See how they're trying to defend it? So hold on. Let me just make this smaller and see who's bigger. The defense is bigger. So if we can get above this, it's going to squeeze. If we can't get above it, it's not going anywhere. So if you wanted to, you could get out of the trade, especially if you're using these apex evaluations. You can get out of your trade and then just wait for them to break it and then get back in. See, so we're going to exit because then they're going to get a ring there, and then triangle down would be a sell. I'm going to be done, though, because there's only 6 minutes left until MOC, and we're trading right into support. So risk reward's not great, but that big defense there needs to get broken. So once you see that they're actually defending that level, and again, it's aligned with this one. See that? And I've got the orange line there because of it. There was actually delta there earlier as well, negative delta. So they find that level, the buyers are finding that level very hard to break, and sellers are aggressively defending it. So it doesn't mean it can't break. It's on automatic short, but it's a level of importance for one reason or another. I don't really care why. I'm sure there's a reason, but the important thing is wherever price is in relation to that is basically who has control on this time frame. But on the higher time frame, buyers have control. So again, we go back into the single prints, and we're going to try to bounce. Now, we have to be careful here, because if buyers get too much delta and then get under it, it's going to shut down. So they kind of want to build this slowly and reserve some power for this. If I had to guess, that's what I'd want to see if I was long from down here still. If we would have held that runner, which is fine. If we got in here, held the runner, you don't have to get out. I just don't like giving back money. So, and those trailing drawdowns are frustrating. So like if you make $1,100 and then you stay in the trade, and now I'm only up 8 something. So it's like I used to have $3,500 of like give back available, and now I have to take that minus the amount that I already gave back. So from the high watermark that my account was, so it was at I think 1130 at the highs. So it's now rather than 3,500, it's like 33 and change, 33.30 or something like that, or no, 33.70 is how much I can give back from here. Now, if I make a new high watermark in the account and make more than I've ever made in here, so if I took another trade and got up to 1,200, now I can lose $3,500 again. But I can't lose like $3,500 of their money, and well, their money and my profits combined cannot give back 3,500 in a row. But if you can recover it and make a new high, then yeah, then the trailing drawdown basically starts over. And like I said, the good news is with the performance account, it's only the trailing drawdown's only there until you make enough to like requalify the account, and then it pauses as long as you don't deduct money beyond that level. So in other words, normally they have $3,500 of risk, but if I can make $3,500 in the PA and I don't pull money out of it, the trailing drawdown would pause there. So it'll blow up if I gave back that 3,500, but even if I made another 3,500, I could now lose 7,000. So, and that will pause there as long as I don't take out money to push all my profits out. Otherwise, I would have a very small trailing drawdown. So you have to manage it appropriately still, but it's nice that once you've made a little money in the performance accounts, you can trade optimally. You can hold runners, let them roll back on you to break even. You can do what you normally should be doing, but if you do that with a trailing drawdown and you were at the high water mark of the account before you entered that trade, or sometimes during that trade, or sometime during that trade. So if you got it, like I just did, where you got into a trade that pushed you to a new high of the day in your account, or not high of the day, highest point that it's ever been, then yeah, you don't really want to hold runners to break even, because now the trailing drawdown's actually affecting you as if you got in like at the high. So that give back hurts just as much as if you had lost it initially. You don't actually lose money, but you just have less money to get back. And that's really the name of this game. Once you've got a like proven edge, you just have to make sure you don't give it back. So sometimes that means being extra cautious, but as long as you have decent risk reward and your win rate stays good, you just don't give back a lot. You just stop doing that. You stop trading if that's happening. You get out of the trade and you wait for the next one. So it's annoying, but totally workable. Like plenty of people in the trading room I'm with, we all, not all of us, but many of us have trading accounts with Apex and take regular withdrawals. You can take up to 2 every month, I believe, 500 or more, but you don't have to. You can leave it in there and protect your drawdown, and then you can build size and stuff like that. But many of us just like have a target for like every month or whatever and try to pull up that target every month. That works for me pretty well. Okay, there's MLC. So see how there was like no liquidity for a minute? That's annoying to be in a trade when that happens. So, but yeah, there is a coupon code in the comments of the YouTube if you want to try out Apex. It's 90% off right now. So you can evaluate a 150K account for like $30. Normally it's like 250 or something. So it's a pretty good deal. Yeah, that I personally find the very small ones, like the 50K account, really hard because you can't give back very much. The trailing drawdown is so thin, you'd have to trade micros, basically. But the 150K is kind of a sweet spot. But a couple of my friends in the room trade 300Ks, and they've got a much bigger trailing drawdown, and it's not that much more expensive, but it'll take a little longer or more size to qualify it. So that's the trade-off. Yeah, once I got my first 150K qualified, I just figured if I like, because you can use a trade copier to like send one trade to all your accounts. So I didn't want to have to be confused by like, oh, the 300 account needs to get 4 contracts and the 150 account needs 2 contracts. Like, I just figured let's just build a stable of lots of accounts, and you can get 20 of them. So, I mean, yeah, you can eventually either trade pretty big or trade small and just like have very low risk, because like if I'm trading like 2 minis in one trading account, but if I had 2 trading accounts just with a trade copier, I could trade 1 in each, and now I can take twice as many losses. And if I just do the same thing with a 60-70% win rate like I usually get, I'm not going to blow that up as long as I follow the rules. So see how they tried to push down and they couldn't, right? And then we got above this guy right there with a bar that's not pink. Did we actually get above him? Got to get VPOC above him. The little yellow dash. Ooh, right on the line. Not quite. We need one more bar on this time frame. The pink bars don't really account for evaluate whether or not you got over or under, because that's just sellers giving up. It's not buyers showing up. Okay, there we go. Now we've definitely gotten over it. So dips can be bought. Again, you're trading into the close. Delta is a little bit, okay, a lot unreliable in like the last 10 minutes. So take it with a grain of salt, but technically it's a long. But there's a lot of noise at the end of the day, I'm going to say. But we did get over it, so. They should hold it. We'll see. And we did not, if we look at the candle chart, we did not tag that VPOC, which is pretty bullish. So, and since everyone knows that, they're going to be exiting their shorts, if I had to guess. Should we do it one more time? Oh. I hate giving back money at the end of the day. It's so frustrating. But it's valid. But it's on a pink bar, which that's... but normally, if they beat that, it would squeeze. But it's the last 6 minutes of the day. Like, flows are just different. So I don't have enough, like, back-tested data for the last 10 minutes of each day to know if that actually matters. But I know generally that's the case. But you see this all the time at the end of the day. The deltas just go nuts because, like, the participants are different. So I'm not confident that it technically works at the end of the day. I also wouldn't trust it for the first maybe 5 or 10 minutes of the open, because again, the participants are completely different, and yeah, I don't have enough evidence that it works all the time. But assuming there's not, like, and it's also not going to work like if like on like during like a Fed presser or something. It's not built to like break out of like news or anything like that. It's not that kind of algo. It's just looking at order flow. And so if order flow is being affected by something like someone talking, that everyone is making decisions based on their words, like order flow will show what the market's doing. So it's not that it's going to be totally useless, but if the liquidity is low enough that like your stop gets hit, like before being able to interpret what's happening, it doesn't really matter. Like, you're going to get stopped out, and then you're going to see that you should have been buying at that exact point. But by the time you can click the button, it's gone, because that's just what happens in the morning at the close, and when there's like economic data and stuff like that. Like, in my opinion, you just don't trade those, because I don't have edge. Like, someone does, and I'm sure they trade it, but like, I don't do like fundamental analysis and how many new homes we should be selling next month, or like, I don't have enough confidence in any macro stuff to like think that I can make a decision ahead of that number or as the number comes out. But once it's been out, if you give it a couple minutes, like, now you have, and like, things slow down a little bit, and the liquidity tightens up, now it's going to work again. So you just have to sort of live within your limitations, like, know what the algo's good at, which is telling you when to execute. But you while you could technically just take every signal, I don't know if you physically could, but if you tried, you probably would do okay on most days. But some days you're going to get wrecked if you take all of the counter trend trades on a day when that same side is trapped. So the algo does not know that like sellers are trapped on a higher time frame, for instance. So it's still going to give me the short entries, but I may know that, like what we talked about over here, like ring triangle down, that's usually pretty good, but it's got to be at resistance, and it sort of was, but they were trapped, so they were unable to really do much. We got 10 points on it, but it didn't extend like it usually does, because it's just going the wrong direction. Whereas ring triangle up gave us a huge rip, and then ring triangle down, barely anything. And so that's not something wrong, that's just the way it works. And so you need to have some way to analyze which direction you want to trade and where you want to be looking for signals, and then you just wait for the algo to tell you to do what you planned on doing, and just helps you with your timing, and like knowing, like, should I take this long or this long, right? Things like that is where the algo gets super helpful. And then, of course, just not having to stare at this and read all the numbers and say, like, I think it's now. Like, I can't do that. I mean, keep in mind, I've got way more signals than you need, just because I'm ADHD and, like, get distracted. And you'd think it'd be the opposite, that, like, since I'm distractible, that more signals would be worse. But I just need something for my brain to do, and then I can stay focused on just waiting for the pattern. Like, I don't need to interpret whatever one of these bars say. I just know, like, this is the location I'm looking for, set up A, B, or C. Is set up A, B, or C happening? Yes, hit the button. But if I used, like, Simon looks at the easier one here. So this is Simon's version of which is a lot simpler. In fact, he doesn't even have these underlines. Those have been replaced with something else. But it's basically just stars, triangles, and lines. And then the dashes for the VPOCs. And you can do plenty with just this. Plenty. But after doing this for 2 years, like, I honestly just kind of got bored of, like, taking the same entries, even though they work. Like, it's hard for me to stay focused and wait for maybe a trade that shows up 5 times a day or something, but pays really well. That's just not my style. Like it's just probably because ADD or whatever. Like, I can see it, even though I've got lots of extra information. I can hyper focus into, like, I'm looking for this. But if I don't know what I'm doing, I've got all the information from this. I've got everything here, plus everything order book. The algo is interpreting all that, and I've got all that information that I need. Anything that's relevant to me would be signaled. So like with the gold and the arrows and stuff like that, like they might not give me a trade entry, but if I'm wondering, am I too extended, for instance, or should I manage this trade in a certain way, I can wait for those arrows. Okay, this is actually a great place to sell. And yeah, if I leave that, if I don't have a signal for that, even though I don't necessarily need it, I'd still be profitable without it. I don't manage it properly. I overanalyze everything and look for every excuse to like exit the trade. Whereas if I figure out that like, okay, on a relatively optimal spot to exit is when you see a yellow arrow. It's not going to be the perfect spot, but it's going to be pretty consistent. And then I just put the yellow arrows in and say, hey, if I'm trading with the trend and it's bullish and I see a yellow arrow, I take profits. And that's that. Then I don't have to ask myself like, oh, did I hold it long enough and all that. Like I already decided my trade was to take it to the yellow arrow. And like I said, do you need the yellow arrow to make money? No. Same with the gold bars and all that stuff. Like you don't need it. But and it's not going to make you perfect. I mean, I still have plenty of stops. But if you just need to find the right match of how many signals you can manage and process with the number of trades that you want to take. Because if you were looking for like 2 trades and you just wanted to only take the very best ones, like you don't need all the signals, right? You can do that with 3 signals easily. You just won't trade every rotation. And I mean, I don't trade every rotation, but I want the opportunities to be plentiful. Yeah, just it's personal preference. But I know for the vast majority of people, this is probably twice as many signals than they want. And I've got other, like, if you look, I've got others. Let me find it. So on another screen, I have like a simplified version. So if I want to, like, if I'm confused, I don't have to mess with this. I can just look to the chart to the left and be like, hold on, do I have like, what are the main components going on here? And it's like, okay, I've already gotten my arrow. I know that if I was bullish, that I should have taken profits already. And so because it's really easy when you have this many signals to like miss stuff. So while it's good for like, if you're waiting for something to happen, it's good to have all of them in my opinion. But if you're trying to make a decision, like you don't know what to do, then you don't want that many. You just need a few to rely on. So yeah, in my opinion, the key is to, once you've got the algo on your desktop, just customize it. And you can go as simple as you want, like stick with what Simon starts everybody with, which is this, and that might be enough. And like I said, I can find all the same trades on there. I just won't be able to like necessarily tell you exactly where to get out and whether or not it's a high win rate, medium win rate, low win rate. But they're all good enough that you could literally just take all of them and still survive. Yeah. There's probably like maybe 30 people in the trading room, I'd say. We're a small group. And I'd say probably 20 of them use just Simon's version. And most of them do great. Some better than me, just with this. That's all you need. But for those of us with special needs, us short bus traders, we need something more to like keep our brains occupied. So yeah, and the good news is when I find something good, I can share it with the group, and then the group can analyze it, and if it's something they want to add to their algo, they can do that, but they don't have to. So there's things on Simon's chart that aren't on my chart because I don't use them, and there's a ton of stuff on my chart that's not on Simon's chart because he doesn't use them. Anyway, huge tangent. So As expected, we did not tap that VPOC. We didn't break that low. And we're headed for high day. Now, I know it's closed, but that's it. Okay, it's not. I'm not going to say high day because technically we close, but this is clearly the target of wherever. When it's going to get there, I couldn't tell you, but that's what they're trying to do. Because if they were consolidating like they used to be, we're going to go over VPOC, like I said, and then from value area low to value area high of that consolidation zone. Now, just because we didn't hit VPOC doesn't mean we can't fall back in there. But closing the day above this consolidation is a really good sign. And then see how volume's actually building as we exited. Also, very good sign for buyers. So this is the kind of night that like it makes sense to hold. Like here, it might not have made sense to hold calls overnight because like from here, it's still just consolidation. You did trap shorts and you didn't hit your target, but like that doesn't necessarily mean you're always going to get to your target and your risk reward isn't great. Whereas here, we started with a pullback. That pullback did not hit the value area low, which is the first sign that like, maybe it's not consolidating anymore. We broke out, we came back, can't touch the VPOC twice, and then broke out of the consolidation area. Guess what? The likelihood that we're breaking out is extremely high. Does it have to go straight up? No, it might come up here, consolidate, bull flag, and then bounce again. Like we might see them come in here overnight. But as long as these hold, it's not consolidating. If they do roll over and we get to the VPOC again, most likely these lows are going to get tested. Most likely. And that happens. Like sometimes things just look so good that like everybody chases and then they run out of steam and they grab this liquidity and just roll it. Like it can happen, especially if the higher time frame is not super bullish, but this is pretty darn bullish. So the areas we want to watch out for are the ones with a lot of volume, but you can see the sell volume, the biggest sell volume is here. And this is the 4-hour chart. And you can see that the high of that is this yellow line right there. And we're above that. So anybody who sold on Monday is now offsides. That's just asking for a squeeze. And the next spot that buyers got stuck is here. And we've already entered this, like teal is the value area of that consolidation from before we had this. And so we've already gotten back into there. So the regular here, we can draw it. So go here, fixed range, and it quit right about there. Oh no, I'm too far. How many was it then? Was it just this? No. There we go. I was like, it's somewhere in here. So it's probably something like that. Nope, that's still too big. I don't remember where I drew it. It must be on a different time frame. One way or another. Is it just this? Nope. No idea. Well, currently, if I take it all the way to now, that would be our target. Let's say 15,275. And because if you think about it, what I'm suggesting is that this whole thing is actually just expanding consolidation, right? And most likely it's already gotten underneath and then immediately rejected. It may not go down there again. It doesn't have to. But most of the time, it's going to come to value area high, just like it did here. And then if it pulls back, we'd be watching the VPOC, which is 15,070. And if that holds and it breaks out again, we're headed to the highs, more likely than not. So, but it's a very sensible place. Like 15,270 would be a real good place to take profit if you're long. Okay. Any questions, let me know. I might take a quick break and grab something to drink and then come back. And I was going to review the trades that occurred earlier, and I can show you the ones I took and the ones I missed. I'm never perfect, but otherwise, if there's people in the trading room that are here, if you want me to break down what a certain trade looks like and how to identify it, I can show you that too. So let me know in the comments what you want to see, and I will be right back. All right. Got myself some new iced tea. And we're ready. All right. So let's back up. Now, this morning, there was a central bank like conference or whatever with Powell and maybe some others, like answering questions and stuff. So again, like I mentioned before, if you didn't hear this, is that the The algo is not intended to overcome like low liquidity situations like that. So if you're gonna see more noise, you're gonna see more stops, you're gonna see sometimes more huge extensions and things that you just don't expect when you have like something unexpected like that no one can really predict. So yeah, when you see that something like that's on the docket, it makes sense to trade smaller, which is what I did. And so in the morning, well, it was like the first hour and a half or so. I traded small with micros, and still made like I think like $200, and then I had an overnight trade. It was like, let's see. So this is Central Time. So where was it? This is it right here. So I did it with micros in the PA, and it was right here. So made a resistance, returned to that resistance, ring, triangle down, goes lower. If you look at the rotation right before this, most of the delta was in the last bar on the way up. So most of the delta was here. And when we closed the triangle bar, that close was slightly lower, or at least even to one tick lower than the big delta bar. So it doesn't mean it's always going to work, but there's a higher likelihood that you're going to break down there because you've gotten behind most of the delta on the wave up. And then yeah, you could have taken ring, triangle, or I could have taken ring, triangle up, but here the biggest delta on the way before that was this purple bar, and the triangle and the purple bar. Oh, nope, I must have just not been watching at that point, because that's definitely valid as well. So the basic idea is find the biggest delta in the wave approaching your entry, and then get a triangle. And the triangle needs to close beyond the biggest delta. Just the close. It helps if the yellow line, the VPOC of the bar, if that is like higher than the VPOC of the delta, but it doesn't have to be. So that one wasn't, and it worked anyway. So as long as the close is above the high for the long, or the close is below the low of the biggest delta for the short, your win rate will be higher. It doesn't mean you're always going to work. And note here, we had resistance, ring, triangle down, and it gets nothing, right? And the biggest delta was this green bar, and that low was below the triangle. And where does the market go before it retreats back higher? It goes right there and then lives one more time. So that's why we want to get behind those deltas, is if you don't, they're going to be support and resistance. Now, like I said earlier, if you caught the beginning of this, there are two ways to look at the deltas. One is to do what I just talked about, and what Simon teaches in the room, which is look at the rotation right before the one you're looking to get into, the one that's going in the opposite direction than your trade, and get beyond or behind the biggest one. So that is like the micro fractal. When you're looking at that, it, in my opinion, it's going to depend, how you interpret delta will depend on whether or not the side that you're fighting is in control, or if it's like consolidating, or if the side is trapped. So while you certainly can just take every entry whenever you get a triangle behind the biggest delta, and you'll do okay. I think we did like some back testing, and the win rate was like quite high. You get a 1R, like 1-to-1 RR, something above 65. It's high. And if any of your trades extend, like, that's just gravy, right? But you will struggle when you are fighting the trend if you're doing that. And one thing that a lot of people like to do is they try to catch the turn or the low or the high. And in my opinion, there's evidence for when that's a good idea, and there's evidence for when that's not such a good idea. So I'm going to quickly, hopefully, show you some examples of how you can not only look at the wave. These are the Weiss waves, and so see what, and you can also just look at whether or not there's up or down candles. So down, 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 up. So the 3 down bars there. 1, 2, 3. Those are the 3 down bars, and then this is your first up bar, right? Which is a down delta. And so from Simon's point of view, and I think this is correct, you once you've gotten an up bar, you can actually start a new wave when it comes to looking for the biggest deltas. So since this one was an up bar, even though it was a down delta, this is your only negative bar in that, like, before your entry with the triangle. So technically, all you need to do in this case is get above that, because the bar before that was positive, even though it was negative delta. That in and of itself is telling if you can get above that, because there were more sellers than buyers here, so getting above that is usually pretty bullish. But so yeah, so that is a valid entry long, just based on that 1 bar being bearish and the VPOC of the delta of that one. Since it's the biggest delta, it's the only one of that, like, set. And in this case, that set has 1 bar. Well, if you got a triangle after multiple down bars, like here, so we have 1, so this is up bar, wick on the bottom, and these, sometimes it's kind of hard to tell with other colors, but if the wick's on the top, it's a down bar. So 1, 2, 3, 4. So those are my 4 down bars. 1, 2, 3, 4. Right? It's those 4. This big one here was the up bar, not the down bar. So technically, since this is the up bar and then the triangle comes after the up bar, you'd actually, this is the biggest delta on the down bars, right? Here. And so that one did not reach it. But in my opinion, because the up bar had the biggest delta, you can use this, in my opinion. Now, here's something kind of interesting. And I think it's interesting anyway. When you are pushing down or pushing up, and here, I can just erase the lines, I think. So if you have a trend like this, momentum, and for me, on my charts, it'll turn purple if there's momentum to the downside, and it'll turn pink in the background if there's momentum to the upside. You can also look at the volume zone oscillator, and if it's broken down, it's usually bearish. So once you have a down rotation, for this down rotation to continue, what you need to do is build volume I'm sorry, delta, volume delta, as you go lower in price, particularly when you break under a support. Now, in this case, if you look to the left, if you were trading here, if you look to your left, this was already auctioned recently. We went all the way up, and then we went all the way back down. We just re-auctioned it. Because it's been previously auctioned recently, before leaving the area, we just went up, stayed still, came right back down. You don't need a lot of delta to retrace this. This is just the beginning of a likely consolidation. You don't need delta to increase here to make lower lows. Okay? If that's not the case, when you're making lower lows, that's not the case. If you're making lower lows or higher highs and not consolidating, you need delta to increase to continue the trend. So for instance, here, earlier, if you look to the left, we are not re-auctioning. We are actually breaking resistance and extending. So we need to note on a higher time frame or a higher fractal where delta was at the previous high, which was here. See that? It's actually this little high is the high, and you can see that high was not as high as this high, because when it happened, oh my god, where'd it go? Right here. So the reason this broke down, if you look, is they were going, here was the previous high, and they made a new high. All of this is consolidation. None of that matters, more or less. But this rotation here, the close was, or the high, I think it is, was there. And here, it tested it on the down bar. But on the up bar, it was like the last positive delta. The close is way down here. We could just look at close for now, I guess. So it was divergent. It did not have more delta here on the last up bar that made a new high compared to this one. So if I draw a line on the pink bar, see that? That was the delta at the high, right? This was the delta at the high when it made a higher high. It's lower. And that's a problem for the trend if it's breaking out. Not the case if it's consolidating. Does not matter when it's consolidating. So once you can't get any higher than that, then what you want to look for is a really big delta that shows up lower in price than this. And again, I mentioned this before, but this setup is amazing. So I'm going to point it out as much as I see it. So if you were here and you're like, oh, I'm breaking out. And then you had decent delta here at support. But once you broke over these previous highs, delta was non-existent. Meaning price is going up, but there's not a lot more buyers. There's not a lot more people aggressively hitting the offer versus the people that are aggressively hitting the bid. So there were more buyers and sellers because price went up. But that was probably because the limit order book didn't have a lot of sellers up there. They didn't need aggressive buyers to push price higher. That's not immediately bearish. But eventually, if you want to push the market higher, you're going to need more delta. The typical, I'll get into that in a minute. So what you're watching for here now is negative delta. And so they actually put in negative delta here on this variable. So we are pushing price to the downside, attacking the trend repeatedly. Because you had a negative delta and then you got lower than that. You broke down underneath them, not just with buyers giving up on a purple bar, but a real bar. And note, VPOC, the yellow line of the individual bars, is dropping. So this was Tuesday, but this is not something you want to ignore if you're long. Now, if you look back, where is most of the buy delta? It's here, right here. Where is most of the sell delta? Right here. So they are pushing with more sell delta, more difference in sellers versus buyers than they've had this entire time. So here they were just consolidating. You wouldn't expect them to need a lot of sell delta. Here they might have been defending a little bit. Now you've gotten under red delta bars and you've got big delta on the sell side. Note, volume zone oscillator dumping, and we've given back this previous higher high, yeah. So all of that is like dangerous if you're a buyer. It doesn't mean that you're always going to take this low out, but it's probably going to rest. So now that delta close is higher than the delta close at the highs, but price is not breaking the highs. What that means is that the buyers are trying to probably because there's an attacker here. They're trying to squeeze him, trying to trap him, and they need a lot of delta to do that because he was heavy. There's a lot of sellers here, or a lot of, it could be one guy, but a lot of contracts are getting sold on the bid. And so they're trying to take that back and returning to this dotted line, which is pretty natural. Problem here is that they didn't have really any delta at the highs. So there was no conviction up here that price really belonged there or higher than that. And then all of a sudden, after price goes lower and tries to come back, all of a sudden, everybody's doing business here on the buy side. Now, that could be because we're building delta. And as you see, as you build delta, you can make a real nice high. But because we've just made a higher high with low delta, and now we have more delta than that, if we take this out like that, even on a purple bar, it is done. This high is very unlikely to be broken before this bar with all the delta is tested. So they test this bar, which is what we should expect, and they defend it, which is fine because on a higher time frame, it's still bullish. So again, this little 24 tick is just showing us the individual rotations. But for me, that is a trade. I can make $400 every contract every time that happens. So I don't really care if they want to go lower or not because I've already made my money. So just knowing that this big delta is what I call misplaced, it's not lap, right about there is what I would expect. And so I'd be taking profits into here, probably 10 points down. Points. Can't talk with hearing myself in my mirror in the headphones. Now, could it keep going? Yes. And you can hold runners. And a lot of times it will keep going. But the good news for me is that a lot of times they will test this on a higher time frame and reject if it's going lower. So if I put my line here, and remember that was the first breakdown, so that gets me short, I can get my $400 and I can hold a contract or two, put my stop there, no problem. But in addition, if they come back up here and reverse, I can actually take more contracts or put back the contract that I took out here, maybe the 2. Like if I got in at 4 with 4 here, took 2 off here for $400, and then it came all the way back up to the point where the breakdown was and reversed, I'm going to put those 2 back on here because now my stop can go here. So I don't have to risk any more than I did initially. I might give back the $400, but I'm not going to go negative because the trade here only has a 1 bar stop and I've already made 10 points. So, and then when it goes 10 points, I can take 2 off and keep my runner going. And if it takes out a swing, I might take it off or just wait for the signal, which, like I said, if you recall, since this is consolidation, we're not breaking under the low. We're not necessarily getting bearish yet on a higher time frame until we break below that. We shouldn't need a lot of delta to the downside to do this, to keep going. But once we break under here, we will. So what I can do with the runner, well, first of all, every time I get a yellow dot, I can move my stop to a little bit above that. In addition, every time I have a green bar like this, the outline bar, not this kind of green bar, but this outline green bar, if they get beat, even if there's not a green dot, I can put my stop above the green bar, because if those green bars get recovered, it's not bearish. It's at least neutral or maybe bullish. But see how they got a ton of delta here, but we didn't break the low yet? That's suspicious. And I want to watch to make sure that they continue to build delta as they break that support, because if they don't, it's going to dry up and we're going to revert at least half of this most of the time. So they break the low and no delta, less delta. I can move my stop now to here. And if we now get a bigger delta than this, but smaller than this, I can just get out the moment that bar gets beat. So this one was 172. The close is negative 166. 164, sorry. 166. It's bigger. So it's gotten bigger, right? Well, to the downside. It's got more delta, but not as much as we had before the breakout. So now my stop goes there. If they beat that bar, this is at least neutral, consolidating, and divergent. And I don't want to be short in the hole. They beat it and I'm out. Now look at that expectancy. Again, the first one, 10 points. The second one, let's say just 10 points. Probably get a little more than that because I had a target down here of the previous day's VPOC, which is, I'm probably getting 15 there, but let's just say 10. The last one, oh, and then, yeah, so I don't remember how many contracts I said, but let's say I got 2 at first, 1 off, came back up, added 1 back, and got another 10 points, right? So all in all, I had 3 contracts of risk, but never more than 20 points on those two contracts, because by the time I added the third one, I was already out of the first one. So really, I'm only risking 20 points per times 2, because I've never had more than 2 on. And here, I'm actually not even risking 20 points. I'm risking more like, I could technically still go negative, but I won't go as negative as I would have if I would have lost the first trade. So 10, 10, and then I have a runner from here. 959, let's say 958 maybe. I was a little late. No, I'm sorry. It's triangle. It's here. So that level is 50. And I'm trailed out of that runner at 01. So we're talking like 48, 49 points. Per contract is $20. So, and again, I got 10 and 10, and then basically doubled that and then some, because I had 20, right, 400, and then I just made 40. So another 800 plus 8, so like 900. So all of a sudden I'm up, like, what is that, like 1,700 just in that one trade. So, and your day can be done. But that was Tuesday. So, but I just wanted to show you that it's how you manage when it breaks out. You're looking for divergence and then an attempt to go lower with delta or go further, but a failure to get it beyond the biggest delta. And might have lost my stream. Hold on, let me make sure I didn't lose it. Did I lose the stream? I think I'm okay. Looks like I'm still. Is it live? Can I go live? It said it had to reconnect, so I might have lost it. Nope, I think we're good. I think we're good. So the way Simon always says, the biggest delta is the one you have to beat. So from Simon's perspective, the triangle would have to get up above that. And so this would be a miss, and then this one would be an entry that stops, but this one would work. And that's fine. That, like, you make back and then some what you lose, right? Because this one's nothing. There's no loss here. So you lose and then you make it back and then some. And that's cool. But from my point of view, what I'm noticing is there's actually, if you can attend, and so you don't need a lot of delta. Did we get above it? We did. That's a stop. That one did not work. It's not 100%. Nothing is. Here, biggest deltas here. Triangle up is not above it. Nothing, right? Biggest deltas. Did we do this one already? You wouldn't take this anyway because that's your target. So technically it's a stop. But that normally works. Here, delta's way up here, so you miss that one. And delta's here, so you take that. And that one would stop as well. So here, it's like iffy because you're right into resistance. You probably shouldn't have been buying. The sells probably work. But here's what's interesting. Once you've broken a low, it changes, in my opinion. The rules should change. So that blue line was this support, right? And you might be able to use this as well. So the idea here, it just didn't bounce after that, is you don't want to fight the biggest delta when there's momentum. You don't want to fight it. Even if you, that's the first rule, is if you're making new lows or new highs following a breakout and you get a triangle in the opposite direction, don't even F with it. So in other words, up here, here's the high, right? Biggest delta, triangle above the delta, that's fine. It was consolidation. Once we've broken above here, right there, you don't want, if this has a big delta at the high, here it wasn't, so it won't matter, because that doesn't trigger. it works, but for a different reason. I'll show you why. Because you can catch this. So here, if there's a down right here, biggest delta is here. It's equal to, right? And that fails. Now you'd be looking right here. But the reason it fails is because you're making new highs. And beating the big delta, testing behind it, is not always bearish. Here, biggest delta is the same spot. You beat it. Oh, sorry, it's opposite way. We're looking bearish. Biggest delta is this. So on the way up, it's this one. Triangle is underneath it. Normally, that's a short. Doesn't, well, gets you a, this one does work. That one does work. Because we're consolidating. We're not pushing to new highs. There's not a lot of momentum here. So that'll work just fine. As long as it's consolidating and you're not trading into support or resistance directly, it'll usually work. This one should work. Big delta on the bottom. We're consolidating. Break out. That's the way it's supposed to work. Once you've broken underneath the support, big delta in the direction of the trend is a sign of strength, divergence. You want divergence first. So now this was the biggest here, this one, right? So we would, like, you'd have to get above that. Instead, what we're looking for is an increase in delta of, so we need another bar to break, to challenge the trend, always. To challenge the trend, if there's momentum, we need to find the biggest delta. There's just one extra step. You need to find the biggest delta. You need to get a divergent bar. So, in other words, a bar that goes lower. If you're looking long for the reversal, the price goes down, but delta goes up. We don't buy it yet. We now need them to try to get bigger. So this close of delta is negative 166, which is bigger to the downside. It's more negative than the one previously. So they are growing in delta from one bar to the next, but they have not overcome the biggest delta, which happened back here. So now, if you get the triangle up, right there, this increased delta that got beat, that is actually all you need to beat. You don't need to beat the biggest delta. You need to beat the one that tried to be the biggest delta after a divergent delta. So divergent delta, growing delta, that's not the biggest. That gets beat. You get back to the biggest delta. Now, in this case, the risk reward's questionable, but it does work. Now, note here, you're not making lower lows. So now we go back to the old rules. And now the biggest deltas. So here, this is the only negative bar. And we don't quite make it over it, so there's nothing to do. Here, this is the biggest delta. The triangle is over it, and so that's a buy. Right into the POC, but it works. So here you take it from here to the biggest delta. Yeah, again, risk reward is not 1-to-1, but technically it's there. And then you could also go, sometimes it targets the biggest up bar on delta. So that would be this. So your target would be this dotted line here, which hits. Like I said, I'm not just making that up. That's actually, if you're going up, look for the last biggest up delta. If you're trading down, look for the last biggest down delta. Because there are trap traders there who tend to act as support and resistance. But this divergent delta followed by an attempt that fails to create the biggest delta, that has a higher potential probability of creating the reversal than just getting behind the biggest delta if the biggest delta was at the end of the rotation. You don't want to fight the biggest deltas at the end of rotations when they are the low. But if the biggest delta is not at the low, see how the delta's increasing to the downside, but price is not making new lows? That is the same setup that I showed before. The thing is, it's not the biggest delta that you're comparing it to, it's the lowest price. So it's, sorry, I don't have that pointing right. It's this. So again, the lowest price on a down bar was negative 166 for the delta. So if we can get a bigger delta than that at a higher price, there, negative 235. Now we just need to get above that. See how the triangle is above this? So again, Simon's rules will catch this because it's the biggest delta and you got over it with the triangle. So it's not a new trade. It's just that this trade will work a hell of a lot better than this one because of the fact that this delta is bigger than the delta at the low. And we've already cleared all the orders. So this divergent delta at the low is basically the beginning of consolidation. So now the regular rules will work. But again, if you go to the highs, it's the opposite. So on the highs, new highs, where's the biggest delta? It's here, right? That's a problem. So this is the highest price. Now this price is lower, but delta increased. Hidden divergence. Get below that, it's short. So it's still the same trade. It's just the win rate is exponential. Yeah. So let's see. So that was here. So let's jump to, so this is all consolidation. I mean, we could do this all day with the deltas, but let me find the next. I want to show you how the lower low and the higher high act differently. See, this one did not break the low, so this is still consolidation. So triangle getting above the biggest delta right here, that's a long, right? And that's great. Keep doing that. Just don't do it if it looks like this at a new low or a new high. So this high, consolidation, not trending to a new high. So it's, you don't treat it any differently. There, broke to a new high. Here's the biggest delta. It goes lower. This is a divergent delta. It tried to go up, but it's not as big as this. If you break it, it's a sell, particularly with a triangle, but a star works too, often. Okay, it goes lower, goes higher again. Higher in price, higher in delta from the previous bar, not the highest delta of the rotation, and we're making new highs. If this one breaks, it's bearish. Biggest delta, it's bigger than the previous biggest delta. Guess what? That trade to break that divergent delta, it didn't happen. It just didn't trigger, and it's no longer valid because now the biggest delta is at the highs, and the last thing we want to do is fight it. So instead, what we should be looking for in these kind of situations for continuation is when you, and this is a trade I have not talked about. That's just my own idea. It's not from Simon. It's not super backtested, but if it's trending, it works. The idea is get a big delta. This is primarily in a trend. Get a big delta. Bigger delta than you've seen recently. You then need to do one of two things. Either you need to test the low, but only put purple or pink behind it, and then defend it and reclaim this bar. That would be an entry, preferably with a blue dot, star, X, something aggressive. Or you put another bar to the same direction with a VPOC beyond it. So in other words, this yellow line needs to go above this high. So if either of those two things happen, either you get under it and hold it with a pink or purple bar, or you get the VPOC above it, then you just need an aggressive trader to follow, usually on a pullback. So here, see how the VPOC rose above it? So our best opportunity to chase this, not chase it, but get continuation, is going to be buying the next triangle, star, blue dot, green bar, preferably after a slight pullback. If you have a target way up here and you don't mind putting your stop down here, you can just buy this, but it's a little risky. I would be very careful doing that on a pink bar, but when it's a non-pink bar, it's usually okay. If you only get a pink bar above the big delta, you need to wait because they may just be squeezing and capitulating. Hold on. Okay. Just have to answer this real quick. Okay, so you could just get in there, but I'd prefer a pullback with an aggressive signal. Sometimes you don't get it. You get an aggressive signal way up here, and it's gold and pink. Pretty risky. Does it work? Yeah. Okay, get a big delta. Let's try again. Can we get under that delta with a purple bar and then return and recover it? Or can we get above it with a VPOC and then get a pullback that is aggressively defended? We get above it. Now I want some sort of pullback. Or I can just buy that, but it's risky. But it's better than if it's pink or gold or both. Okay, it's just, that's your pullback basically. You'd have to get it on a smaller time frame. And sometimes that's how it goes. You just don't get the chance, but the signal that it was bullish was there, and the last thing you want to do is short when you got a big delta, and then you go higher than that in price. Like I said, even though that can the reversal can set up that way, if they don't fight those prices that are going higher, even if delta's going lower, do not short. So here, biggest delta was here, right? Divergent delta. Try to go higher. If they break that, it's bearish. We're keeping an eye on the biggest delta. Can we break that? Okay, divergent delta. Delta goes higher than that divergent delta. Break that delta, it's bearish. Goes divergent delta and red. So I don't want to be in my long if we trade under this. Biggest delta is 246. This is the biggest delta at the top. It's going to be pretty hard to buy this. So it's probably a short, but we have to wait for this to break first. And they're just not going to let it go. That's fine. Sometimes they are going to break it. So it just didn't trigger the short. It did not break this. So there's nothing to do. Okay, new high, not the biggest delta. We need a lower delta and then a bigger delta. Okay, but still growing in delta, they can still go. If anything, you can buy that as a breakout. That's exactly what you want your breakouts to look like, is building delta with building price. Okay, divergent delta. Price went higher, delta went lower. We need one more bigger delta to be not the biggest. There. Bigger delta, not the biggest delta. Get under that, it's a short. Is that bigger or smaller? Smaller. And that's bigger and not the biggest. Get under that and it's a short. Okay. Smaller. There we go. Okay, so we're going to get the divergent set up, I think. We just need a triangle underneath. Right there. So that is a short, in my opinion. Now, from Simon's point of view, the biggest delta here was this one. It's the same, right? So it's also a short for Simon. But sometimes the biggest delta is back here, and then it just tried to go higher, but not enough, and then pulled back. So the reason it is for me a short is it's not the biggest delta in the direction. So this whole wave, you can see it here too. There's not as much volume in this wave versus this wave. So it's probably gonna retrace at least half of that. And that's usually the way to do that, is you get it there. It doesn't always immediately drop, but it's gonna at least consolidate probably. Now we're looking for a VPOC that's higher than that, with a price that's lower than that, and then try to break that. Price got higher. VPOC got higher. It's still definitely not higher than this, so we could still do the short. There, divergent delta, increasing delta. Get under that, it's a short. Increasing delta, increasing delta, increasing delta. So all of these big deltas, remember, if you get a big delta and then a pullback that holds, you can technically buy it if you're bullish, because it's not bearish unless you break it. So this whole time, if you would have bought any of these dots, you just hold until the divergent increasing delta is broken, which didn't happen there. It did happen here. They broke that one. So you would have been out. But here, bigger delta, get higher than bigger delta. It's pink, so I don't love it. They are now definitely higher than biggest delta. You can just buy it or wait for a pullback or a wick. You could probably buy that. You could probably buy that. And if they get under this, you're done. Higher delta, higher delta. So you could probably buy that. Higher delta. Okay, lower delta. So now if they go up, sorry about the plane. Jet. Oops. So price went up, but delta went down for 1 bar and then tried to go up, but not as big as it was before. If you get under that with a triangle, it's a short. And they save it. See how they get a blue dot? That's probably a long. Bigger delta. Smaller delta, bigger price. Get above that, but below this, and then break under it, and it's a short. That needs to break this to be a short. See how they hold it? Biggest delta, counter trend. Break it with a triangle, long. Well, your risk reward sucks though. and you had divergent delta, I probably wouldn't do it. Ring triangle down at resistance, that's usually a short. This is the biggest delta. Oh, did we have the last defense? I missed it. Right there. So this is the biggest delta on the last wave. 318. This close is bigger, 328. I missed it. So this is a bigger delta than at the highs, right? But price is not going higher. If we beat this with a triangle, especially ring triangle down, it's a short. It doesn't beat it with the triangle. We gotta wait. And it doesn't trigger. And that's good because it goes higher. So this is the biggest delta. This one's divergent. This one's also divergent. To be able to short here, we need to get a bigger delta than that on an up bar. Otherwise, our line in the sand stays down here. And our biggest delta to the downside is here, and we did not beat it with the triangle, so there's nothing to do. Okay, there, bigger delta after a low. So if this gets beat with a triangle, it's a short. Lower delta. So now we got to get under this. Yep, and they save it. And so the triangle did not reach it. So I wouldn't be excited about shorting that yet. But if we get a triangle, we can. There we go. Triangle breaking underneath. Now our stop needs to go above this. And remember, we made higher highs, but on a higher time frame, it's divergent. So in this case, the biggest delta is way back here recently. So that's our first target. And then the biggest sell delta is way down here. And that's our secondary target. Big delta. So that can't get beat. Otherwise, we're out. See, this is consolidation, so it's okay if it goes down in delta. Approaching our target, which is here. There, target reached. Oh, maybe not. There, target reached. So I'm out of most of my trade. I might leave a trailer, but more or less done. Now there is a support there. So yeah, they just kind of ran out of delta. So where's the biggest delta since the up bar? Here. Nothing to do here. Okay, biggest delta's here now. And we can't break over it. And there we did. So came down to support, put in a big delta here, broke over it with a triangle, goes higher. So, and this is all overnight. So it's just the same thing during the day. So as you make a new low, you have to watch for divergence. But if it's not a new low, we want to look for the big deltas and break above them. And so if you look to the left, this is consolidation. We're not breaking down under new lows. So this big delta getting beat by a triangle is a long. And then this big delta getting beat by a triangle is a long. And then this is not new highs. We're consolidating. So we're looking for biggest delta. Since a down bar. Way down here. So we're not shorting. That's usually good. Ring triangle up at support. This is the biggest delta. Beat it with a triangle. And that one fails. Sometimes they're going to fail. Biggest delta. Beat with a triangle. You make your money back. At support. Biggest delta's way up here. Nothing to do. Biggest delta's here. Didn't beat it with the triangle. Nothing to do. Biggest delta. Star. Didn't beat it. Not enough. Now, could this be... No, this is not. This is definitely consolidation. So nothing to do. Big delta. Yeah, we're not beating it. So that's a down delta. Beat it with triangle. You could buy that. And then biggest delta, not a new high. Still in the consolidation range. Beat it with a triangle, probably going lower. And this is the open. I mean, having one stop in the first 15 minutes is pretty good. Get a big up bar, delta, triangle down under that, short. And that one might stop. This gets beat by triangle up. That's a buy. You make your money back. This gets beat by triangle down. Or does it? If it does, it stops. I think it does. So that's a stop. They're going to be distributed around. This one equal. Not a good idea. Wait. Nope. Biggest deltas at the end. That's a long. And you're good. And my day's basically done in the first hour. Biggest delta. Break below with the triangle. Short. I mean, biggest delta. Can't break above it. And it doesn't work. Because you shouldn't take it. So if you think this is a new trend and you have a biggest delta that's getting held, you can short this. But you have to think it's a trend. And like I said, I've got other tools to show me that. So if this red line stays under the green, it's probably bearish. So if I identified that this location was good and I wanted to be bearish for one reason or another, that's what they usually look like, is you have big delta, attempt to break it, but all you can do is put a pink bar or wicks over it, and then you continue. And then dots, X's, stars, triangles, they all work. So, yeah, then I don't think there was Zcon. Oh, yeah, there was. Maybe not. I don't remember if there was Econ today. So biggest delta's here. Triangle up, beats it. Goes biggest delta's here to the downside. Triangle up, beats it. Goes. Biggest delta's way down here. Not shorting that. Note they come into the biggest delta, and all they can do is put a wick under it, and they put a star here, buy it. And your day's done. Right? So you can make this as complicated as you want, but the truth is all you need is a few setups and a way to analyze where you want to trade. And keep in mind, a lot of these that we just went over, like, they triggered inside of fair value. Because a lot of today, most of today, was inside of that value area. And that's the hardest place to trade. Yet, I think I counted 3 stops and, 100 points, let's say. So the system works. Let's put it that way. If you want to learn more, I would recommend emailing my coach Simon. Trade, the letter N, wordperform@gmail.com. You can also talk to me on Twitter @RedBenTrader. Hopefully the stream worked okay. I had some warnings that we were getting reconnected, but we shall see. And I will see you soon, and hope you trade well.